Hey there, and welcome to this explainer. So today we're going to be decoding how specific everyday candlestick formations actually reveal the hidden battles going on in the financial market. We're zeroing in entirely on two super important reversal patterns, the piercing line and the dark cloud cover. Let's just dive right in. So we're going to explore some fascinating, honestly almost poetic names given by Japanese traders centuries ago to track price movements. And it really starts with this one kind of wild question. Can a simple cloud predict a stock market drop? I know, it sounds a bit like meteorology, right? But it's actually pure market psychology. See, the Japanese rice traders who invented candlestick charting gave these patterns highly descriptive names, like a dark cloud gathering in the sky, just to give traders an immediate gut-level visual intuition of what was happening. But before we look at the clouds themselves, we really need to quickly review the fundamental forces at play. Okay, so keep this core concept in the back of your mind for this entire explainer. Every single candlestick you see on a chart is a literal, historical record of a fierce tug of war between buyers and sellers. That is literally the secret to decoding these charts. The size of the candle and exactly where it opens and closes, well, that simply tells us who won the battle for that specific trading session. All right, moving on to section 1, the piercing line, a bullish strike. The absolutely crucial point here is the sequence during a downtrend. So step 1, we see a normal red candle. Sellers are clearly running the show. Step 2, the very next candle gaps down, meaning it opens even lower than the previous close. Now, panic might be setting in for whoever's holding the stock, right? Because it looks like the price is just going to crash even further. But then step 3 happens. The buyers unexpectedly fight back. They storm into the market, absorb all that heavy selling pressure, and aggressively push the price all the way back up to close high. It's a total plot twist. Now, the golden rule of this pattern comes down to a very specific threshold. It is not enough for the buyers to just, push the price up a tiny little bit. To be a true piercing line, that second green candle absolutely must close above the 50% midpoint of the previous red candle's body. 50%. That's the magic number. It shows a massive, undeniable shift in momentum. Try to think about it visually. Even if you have to picture an imaginary line cutting that first red body entirely in half on your screen, the buyers must pierce right through it. They've got to push the closing price above that invisible line to definitively prove they've ripped control right out of the seller's hands. The sellers tried to push it down right at the open, but the buyers stepped in and said, "Nope, we're taking over now." And actually, here's a quick pro tip straight from our source material to help confirm if this bullish reversal is the real deal. Pay close attention to the trading volume. You basically want the volume on that first red candle to be, relatively standard or even low. But the volume on that second victorious green candle, that should noticeably spike. High volume on that second day proves this isn't just a random fluke. There is real conviction and real money fueling the buyers. So now that we've totally mastered the bullish side of things, let's look at the flip side. If you take the exact mechanics of the piercing line and just flip them, like looking at a mirror, you get its complete opposite. With the piercing line, remember, we're in a downtrend and the green candle violently overtakes the red one. But what happens when we're cruising in a strong uptrend and suddenly the red overtakes the green? That brings us to section 2, the dark cloud cover, a bearish shadow. Let's break down the anatomy of this impending storm. So in a strong uptrend, everything is looking fantastic. Step 1, you see a healthy, solid green candle. Buyers are firmly in the driver's seat. Step 2, the next candle actually opens even higher. We've got a gap up. The buyers are feeling incredibly optimistic, probably thinking the price is going straight to the moon. But then, step 3 acts as a total ambush. The sellers aggressively storm the market right at the open bell and just relentlessly push the price down for the rest of the session. And right here, we see the exact same golden rule we learned earlier, just playing out in reverse. Kind of like literal dark storm clouds rolling in and blocking out the sun, the sellers force the red candle to close below the 50% midpoint of the previous green candle. That imaginary line gets crossed once again. By dropping below that halfway mark of yesterday's gains, the sellers are sending a massive, glaring signal to the market that they now dominate, and a pretty significant price drop could be right around the corner. Which leads perfectly into section 3, trading the trend reversal. Let's take the dark cloud cover as our primary example for this. If you're scanning your daily charts and you spot this exact sequence, a green candle, a gap up, and then a red candle closing below that 50% mark, well, you can reasonably anticipate a downward drop. According to our sources, traders might actually capitalize on this impending reversal in a couple of ways. Say you trade options, You might buy put options, which actually increase in value as the underlying stock price falls. Or, alternatively, if you're day trading or operating on margin, you might execute a short sell. This lets you potentially profit directly from that downward momentum. These epic battles between buyers and sellers, these dramatic, sudden shifts in momentum, they happen right before our eyes on the charts every single day. The piercing line and the dark cloud cover are really just two of the ways the market kind of whispers its secrets to those who actually know how to read them, which leaves us with one final thought to chew on before you pull up your next chart. Are you ready to spot the clouds before the storm hits? Thank you so much for joining me in this explainer. Keep a close eye on those 50% lines and happy analyzing.